The Todd Shapiro Show.
Time to hit the button!
On Canada Talks, SiriusXM 167. Stock Jocks with Genevieve Roch-Decter.
Genevieve Roch-Decter from Grit Capital. How are you?
Good. I was thinking there, listening to your ads, that we should probably have our own PSA for never giving financial advice on our segment here. We should have a big PSA on that.
No, and you're right. I mean, we talk about the capital markets. We talk about publicly traded companies, sometimes or even companies that you promote, companies that I promote in terms of marketing. But everyone always needs to do their own due diligence. Everyone always needs to be sort of accountable for their own trade. And but it's okay to listen and get ideas. And then from there, we're not recommending anyone to go and buy something. We're just suggesting that go and check things out. And maybe there's one company you like after researching it. Fair enough?
Yeah, and I would also say use the information you learn to challenge your financial advisors, because oftentimes people don't challenge them enough. Like, when you go to the doctor now, everybody has health information at their fingertips. So doctors are getting challenged a lot. When people come in there and they're like informed patients. But I don't think it's not the same with financial, the financial relationship. So use this advice and, challenge your financial advisor to find out how much he actually knows, because they do charge a lot. Fees.
Before we do our regular little bits that we'll get into in a moment, have you ever used any of those sort of trading platforms that are like make believe, like a fantasy trade? Like you just you get into it, it doesn't cost you anything. You're not using your own money, but you're just putting yourself in hypothetical situations. Have you ever tried that stuff?
I have never, but I know that at universities and colleges they have those embedded in the programs, finance programs, and they're very successful and well recognized. I was very fortunate that I got to play real life investing at a very young age, and I will forever be indebted to that position, because it allowed me to learn how to, make mistakes really early on with real money, which is some of it was my money because I was invested in the fund that I was managing, but there's nothing like doing that day in and day out for a good 7 or 8 years that I did.
Yeah,
I really learned the business.
Without a doubt. You also have a great motto of your company at Grit Capital, and go and follow them. Great Instagram account at Grit Capital. Your fail forward approach.
Yeah, make mistakes, fail forward, fail fast, fail often. I love failure, and I think failure should be the relationship that people have with failure in the world should be changed, because failure is a necessary predicament for success. You can't succeed without failing. There's all those. What was that? Michael Jordan. Who was it that said I miss 1,000%?
Wayne Gretzky said you miss 100% of the shots you don't take.
Yeah, exactly. It's you got to keep taking shots, and oftentimes they don't work out, but you learn a little something every time.
No doubt. I heard a meme for a hockey player on the Maple Leafs. His name's William Nylander. I'm hard on him often on Twitter, and someone made a meme that said you miss 100% of the shots you do take for him. But anyway, that's an aside. Genevieve Roch-Decter is hanging out with us, and every week we get to learn a little bit more about sort of what's going on with Grit Capital and on her mind, and of course just in the world of finance. So let's start off with the hot stock of the week.
Hot Stock Sector of the Week.
So Brookfield acquired a 62% stake in a company called Oaktree Financial, and sent the stock up 13% on Friday alone. Now, in itself, this isn't that interesting, but what is interesting is I was at a dinner party on Saturday night where we started talking about the whole asset management world and how it's changing, and how these types of transactions where you have a very specialized asset management firm, or two of them being, one's acquiring the other, but they're essentially kind of merging. This is going to become more and more mainstay, where you're going to see specialized asset managers merge. And then the more commoditized regular stuff, sort of passive investing, is going to become cheaper and cheaper and cheaper to manage. What I mean by that is, you've heard of these new platforms that have been launched that are zero commission trading. You've heard of brokers at the big banks that are being consolidated and are being told not to actively manage assets as much anymore, and they're just being told to put their clients' assets in the bank products. So there's this real divide happening where specialized money, which would be in real estate and private equity and more exotic products, are consolidating, and those money managers are going to be making, taking a bigger slice of the pie. And then the more boring stuff like being long the TSX or just the index stuff and the passively managed money is going to be, it's just going to be done on a broader scale and much more cheaply.
And I mean, is that sort of like consolidation in almost all industry right now, where there's like a lot of acquisitions and ultimately, are we seeing that more in business than ever, really, where, the one company owns a many different under their umbrella?
Yeah, but I mean, in asset management, because of, technology, there's all these sort of platforms now that, the invention of the ETF and lower costs. It's just that more of that sort of boring kind of passive stuff is being managed on a larger scale.
Okay.
And also there's a lot of evidence now showing that the, actively managed portfolios that are run by the banks have really underperformed the markets. And so there's kind of a lot of pushback where investors are going like, why is my money being managed by an active portfolio manager when they're underperforming, something that could be in a passive portfolio? So I just think that you're going to see a lot more specialization and then a lot more larger scale commoditization of certain aspects of the asset management business.
Hey, listen, a lot of people are furious with their banks and their investment advisors because none of them would have dared touch any of the pot stocks more specifically. And that's been a frustrating thing for a lot of investors where they're looking at idiots on Twitter, who are making some good coin over the last couple of years going, hey, why couldn't you have done that? But there's so much, risk that they have to weigh and they associate with that. But is that becoming frustrating for an investor where they're like, come on, take some risk, people?
Well, I mean, the banks will take, they'll make their own call on this. Like, for example, National Bank right now is still not allowing cannabis at all, across their entire platform, no research, whereas I believe RBC and CIBC have allowed it. So, yeah, I mean, I always make fun of it because it's like when they decide that it's not risky anymore, it's probably the riskiest time for investors to put their money in it. Like I was literally talking last week to some big hedge funds in New York, and they're starting to look at this on the short side, aggressively, because they think these valuations on the cannabis stuff, unless you have what they call duration, which is, a 5, 10, 15-year horizon, there could be a lot of pressure because the valuations on these things are 10, 20 times revenue, which is kind of unsustainable.
Genevieve Roch-Decter from Grit Capital is with us. The worst trade of the week.
The worst trade of the week.
West Shore Terminals. So West Shore Terminals are in the coal business. They're one of the largest waters on the west coast of North America and South America. Stock was down 30% last week. Big time. They lost one of their biggest customers is potentially filing for bankruptcy, so that revenue could potentially be lost for them. So I think a lesson learned here is that even with a company of this size, it's about $1.4 billion, even after the pullback on the stock. I think one big customer, and I think the size of that customer is somewhere in the 10 to 15% range, so it's not like it's 50%. But, investors will sell the stock off aggressively. And one of the lessons learned here is that you just never know what's happening. It's not enough to know what's happening with a company. You need to know what's happening with its own, customers, right? It's like one layer deeper.
When stocks go down so much like that, especially in kind of a one-day slide, and then if you look at, I'm already looking just sort of at their year chart, it's kind of, been hovering.
Well, they were down again today.
Yeah, down again today. At what point say if you're new to the stock, like I'm just new to this stock now, as you mentioned it, never even heard of it before in my life, West Shore Terminals. What do you say to people who go, oh my goodness, this is an opportunity to now go and buy? What kind of research can they do on the short term to try and capitalize to see if it's worth it to buy the dip?
Well, usually this is what happens, okay? So there's a press release. So in this case, they'll say, one of our customers is potentially filing for bankruptcy. I don't exactly know what the press release was. I didn't go and check it out. Then the stock goes down. And then if there's an analyst covering the stock, they will put out a report. In this case, they did. BMO cut its price target on the stock. And then the stock has, as you see today, gone down further. So I think you kind of have to follow that pattern, which is look for the news release, look for the pain on the stock. Get your hands on any analyst reports. You can ask your broker for an analyst report. I believe they're allowed to send them to you. I'm not exactly sure on that. And then read up on it and get their advice. If you're paying a financial advisor, they should be giving you advice. So that's what I would do. But a big thing to look for is the volume increase too. Like, so on these stocks, you'll see on West Shore, I think their volume went up like 5 times after this announcement in the subsequent couple of days here on trading. So usually that means institutions are pretty much dumping some of the stock when the volume goes up.
Good to know. And not to sort of in any way take away from how tragic it was, the Ethiopian Airlines flight and Boeing and stuff. But these are the types of things that affect greatly a stock price as well. And you know, it's interesting within, you know, any industry really, that if there's a crisis within the industry, that's you know, you sort of never know when that might happen. And that is it tough in a business of money where people, and I don't think it's capitalizing on opportunity, but I just think it's recognizing that when a stock goes down, that maybe it would be a good time to buy Boeing.
Yeah, and I mean, with Boeing, like, you have to look. I honestly have nothing, like, no comment to say on it, except for I've read the same headlines as you. But, like, you know, you have to look at it. Is there a more systematic, broader issue at hand? Like, why was this particular airplane, this particular model allowed to fly? Like, is there something broken in their kind of compliance and due diligence checks? I mean, I know other airlines were flying it as well. But, you know, that's what you kind of look at it. Or is it just an anomaly, statistically speaking? This is just going to happen in the world. You know what I mean? It's like you can never get rid of, you know, all murderers in the world. Statistically speaking, there's always going to have a percentage of the population that murders people. So it's that kind of thing. You're kind of looking at it like, is there a pattern here? Or is it like a one-off? Is usually what you're trying to figure out.
Genevieve Roch-Decter's with us. I'm sure you have a finance term of the week queued up. Is it possible if I throw one at you after we hit this little ID for it?
Well, why don't we do yours?
Yeah. Okay, so Blau, hit the thing.
Finance term of the week.
Okay, I want to ask you, because I got to be honest, as well as I understand the markets, and I'd like to think I know them well now after sort of focusing a ton in the last couple of years, I still don't understand what after hours are. Why the hell could people trade after me?
Hey, I like this when you ask me questions.
Okay.
Okay. After hours trading. Okay, well, this is one thing. So what does it mean? Okay. After hours trading means that people can actually trade, and this usually happens with institutions to institutions, okay? They can trade stock with one another, but it has to be at agreed upon prices, obviously. And, yeah, they can trade with one another. It's the same as, like, before market opening, there's some trades sometimes as well. So companies sometimes when they want to create kind of like they're going to go public or something like that, they can create like some trades before it goes public to make it look like the valuation has kind of gone up. Not to make it look like it actually does, but they put up some trades to make it look like, oh, maybe the IPO is going to open not at $10, but like $14 because we've traded some stock here before the market opens. It's possible. I mean, I think eventually the entire stock market will have to move to a 24-hour situation because essentially, like other markets like crypto trade 24 hours a day. A lot of futures markets they trade, nonstop. So I don't really know why the stock market hasn't evolved to that. The technology is definitely there, but maybe it's the humans don't want to be working all night shifts.
Listen, I'll be honest, as someone who was doing some cryptocurrency trading earlier last year, the stock market should never be open 24/7 because that will literally drive people to insanity. It's not safe. And I'd warn people, if you're going in a cryptocurrency world, which I go and check that out. Also do your due diligence. Just know that it is a market that doesn't stop.
It doesn't stop. They say like money never sleeps, crypto never sleeps. Like that was a big thing, a badge of honor in the crypto world is that they never stop trading and never sleep. But I don't know. We'll see. Probably 10 years out, the stock market will be 24 hours a day. But
I already feel like it's enough. I just don't like the fact
you'll be retired on your yacht from learning all these finance.
That's right. Because of Genevieve Roch-Decter, I got my yacht right now. It's an 8-foot fishing boat. But it's all right. It gets me through. It just can't be that wavy, and then we'll be fine. Okay, let's move on to the stat of the week.
Stat of the week.
Okay, so the biggest esports gamer in the world, Ninja, was paid $1 million to promote a new game that just came out called Apex Legends. And so Ninja's the most popular streamer gamer on Twitch. Twitch is where everybody goes to watch gamers. It's got like 13 million followers. And what's interesting about this is that the company that makes the games, EA, they did not do any kind of like advanced marketing of this game. So typically in the gaming world, what would happen is like there's a bunch of pre-marketing before the game drops, just like when a movie is about to hit theaters, right? They do a bunch of marketing. In this case, they didn't say anything, and they just paid a bunch of these quote-unquote influencers. So Ninja got paid $1 million, but there were a bunch of other influencers that got paid smaller amounts. And they just started streaming and playing this game. And apparently it really worked out because when the company did a stream on this game, like at the same time that these influencers did, the influencers got like 10 times more people watching. So it created a lot of buzz. And now apparently this game is giving Fortnite a run for its money.
Really unbelievable. And it really is unbelievable for people who don't get the gaming industry. And, you know, we both had clients, you in the past, and I think, me sort of still currently really, which is enthusiastgaming.com and getting to know them and sort of seeing their investor deck even and stuff, comparing that. I remember, I haven't seen it in a while, but they had a chart showing the difference between like movie openings and video game openings. And it's really astronomical in the amount of more money that video game openings have, isn't it?
Yeah, it's huge. And like right now, I'm very excited about this. And I actually just did a podcast with an investment banker who's got the pulse on all these e-gaming and esports deals, because on Bay Street in Canada right now, this is the next big thing to go. And what I mean by that is like cannabis, you know, the bankers made a lot of money in cannabis, but now they're all looking for like a new sector to make money on. And because this is like a legit industry that's, you know, it's grown substantially over the last 5 years. There's real money to be made. It's a billion-dollar industry, and people think it could 10x from here. There's a lot of deals. You're going to see some deals go public that are going to be very interesting. And obviously Enthusiast Gaming, which is in the space, will hopefully benefit from that.
Yeah, definitely. Here's an example. Avatar, which was one of the top 10 movies of all time, $2.8 billion in gross. Space Invaders. Blau, you played Space Invaders?
I've lost a few times.
Okay. Guess how many billions it is earned?
I want to say 10.
13.9, so like $14 billion. Just to give you
accurate there.
A pretty wild stuff, man. I can't believe Furious 7's on the list of top 10 movies, so that's insane to me.
How many is that? They made 7 of those? I can't believe it.
Yeah, I know. Pac-Man, by the way. Guess how many, Genevieve Roch-Decter, guess how many billions Pac-Man has earned?
I don't know. That game's been around for what, like 40 years, 50 years maybe? I'm going to guess 20 billion?
13 bill.
Okay, I'm not off by that.
Well, no, not the well. I mean, it depends how you look at billions. If it's a lot or not. I look at $250 million as a lot.
Hey, by the way, Billions season 4 just dropped last night on HBO. Can't wait to watch it.
I haven't seen one. I gotta check it out. I hear it's unbelievable. Okay, let's move. Yeah, sorry.
That's a really good show for listeners to get up to speed on the sort of U.S. aggressive hedge fund industry and learn about the very bad tactics that are used by a lot of those firms. Now, a lot of that show is actually based on real stories that have happened.
Oh, God.
People put in jail and blah, blah, blah. Yeah, so.
Pretty frightening. Yeah, everyone's greedy. That's the problem. Don't be too greedy if you get investing. And profit is profit. Be happy with profit. Okay, this could be one of the things we hate about finance, but let's find out some more.
Finance to hate.
Okay, so sideways markets, which is what's happening right now, meaning the TSX and the S&P are kind of going sideways. They're not they're not going down because they're not going up, okay? So this is kind of a necessary evil. We're kind of in a neutral phase right now, and I hate it because it makes me really uncomfortable because I have no idea where the market's going. Everybody starts to kind of tighten the belts a little bit. It's harder to get new clients. It's harder to do pretty much everything. I don't want to put more money in the stock market. Investors don't want to either. Less deals get done. But the flip side of it is it really makes you realize when you look over your portfolio and you look at the clients you have, and it gives you a time to kind of refresh and pause and look at like if the things you're doing are really worth your time and your money. And so it is a necessary evil, but it also makes everybody very uncomfortable because there's uncertainty.
Well, yeah, I guess. But, when you say sideways markets, don't the blue chip stocks just generally have a more sideways trading but slow, gradual incline? Whereas, when you start to deal with some of the small cap companies that we speak of, you're used to kind of bigger swings. Is it like this? Is it at least, like you just said, it's a bit refreshing now? Just like, okay, we can figure out what's going, like take a breather here.
Yeah, but the fun thing about finance for me is the action, when there's action. And when the broader market presents uncertainty, then it doesn't matter if the investors are small cap portfolio managers or large cap ones. There's just less money flowing into all deals. There's less deals being done by investment bankers. It's a whole system kind of contracts a little bit, And so it's just a pause. It's just a pause. But it's just not as fun.
Yeah, I guess, and you make me think of how I keep hearing this a lot, where people are addicted. They're addicted to the deal. They're addicted to the next deal. They want the next deal, like the deal, whether it's a trade or the deal. That there is a thing about trying to find, as you said, the next 10-bagger, right? To get in. People really are intrigued by something to go boom, and you hear these there's opportunity always presents itself, is what I'm getting at, doesn't it?
Yeah, there's always an opportunity, but it really helps when money is flowing. Like cannabis the last 3 years has single-handedly, lit a fire under the entire Canadian capital markets ass. I don't even know if I'm allowed to say that.
Yeah,
but, you know what I mean? So it's when the whole sector is moving, it becomes a lot easier to make money in stocks. You'll often hear people talk about, oh, well, this stock is undervalued compared to the group. But when the entire group moves down, the whole sector of stocks trades off, doesn't matter. You know what I mean? It doesn't matter what your company's fundamentals are. It's the whole thing. All the multiples are going to contract together. So that's just generally not a great time. But like I said, it's a necessary evil, and you just learn to get better at, being able to take a pause when it does happen and not sell things for the sake of selling them. But if there's something dragging in your portfolio and it hasn't recovered, sometimes it's good to shed that dead weight.
Yeah, let's invest again. Okay, let's move on to, and it's a nice segue actually, leads into it, to things we love about finance.
Finance to love.
Innovation in finance. Last week, a company called Wealthsimple introduced $0 stock trading commissions. Okay, so for certain people, so they're rolling this out slowly, that certain people and then eventually the broader public will be able to download this app and trade on this app for free. There's going to be 8,000 publicly traded stocks and ETFs on Canadian and U.S. exchanges that you will be able to trade. Wealthsimple came out, I want to say 5 or 6 years ago, or robo-advisor, meaning they have basically robots investing your money, so it's very low fee. And it's meant for a millennial investor who doesn't want to deal with an investment advisor at a bank, doesn't want to pay fees, just wants to be in passive strategies. And, I give them kudos because they've actually built up their business really well. They have over 100,000 clients now in Canada and the U.S. and the U.K., and they have over $2.5 billion in assets under management. So they put their name on the map, and I think with this type of innovation, banks are going to have to follow. Everyone's going to have to follow because it's going to cost zero money to trade stocks.
But I like to hear that, especially for new investors. If you're not investing with a lot of money and you just want to throw in, a few $100 into something, if you have a $10 trading fee, all of a sudden your cost per average per share, you think you're buying some for 82 cents. Next thing you look at it, because of that 10 extra bucks on your 200, original purchase on the bid, it makes your average share 84 cents or something if you do the math. So you'd have to make sure there is and if you're doing in smaller numbers, and then there's another $10 on the trade, you really got to get a significant increase if you're dealing with smaller numbers of shares. So I think it's really good for people, and that's important.
Yeah, and saving every dollar counts, right? All the banks have shown the compounding of saved commissions over time and how much that leads to the bottom line for you. So yeah, I think this is fantastic. And I just think that an independent firm like this, I know they're owned partially by some insurance companies, but this type of innovation growing this quickly, this fast, and getting this kind of attention will catalyze the entire market to do so, I think, over the long run.
Well, thanks, Genevieve Roch-Decter at Grit Capital, at Grit Capital. Go and follow them. We love doing this segment, but I think it'll be a little bit more effective if you get your butt in studio next week. How does that sound?
Actually, yeah, I'm going to New York, but I'm back on Sunday, so that could be, as long as it's not cold anymore outside.
Oh,
right?
come on. Come on. You can handle it. We need no one's taking stock in the weather. That's too unpredictable for sure. Awesome. I honestly really appreciate all your time, and these segments I think are so great, helping people understand finance and making it fun on our Millennial Mondays and Money Mondays, and just making people sort of aware of what's going on in the finance world. Thank you again.
All right. Thanks so much.
Cheers. Have a good evening.
This is the Todd Shapiro Show on Canada Talks, SiriusXM 167.